Hi, welcome to this video day, which is on the 9th of November. It's Saturday. Just going to give our updated outlook and analysis for the Canadian dollar. We're going to be looking at USD CAD. We're also going to look at two crosses as well, NZD CAD and CAD CHF. Now we'll go to the charts in a moment. Now, I've done a couple of videos on the CAD over the last couple of weeks. We think the CAD is due a major turn to the downside. Now, what is reinforcing our bearish view is, in terms of our favourite sentiment indicator in Forex trading, the COT net traders positions, we can see smart money commercials selling the Canadian dollar hard everywhere, basically, as speculators build up longs. And that points to a big breakdown in the CAD. Now, in terms of the three trade setups, we will go and take a look at them right now, but please do keep in mind, it is my view as of this moment in time. It can, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video and you will get live access to our member center. Right, in terms of the first setup we're going to look at, it is going to be USD CAD, and we'll look at the COT net traders positions first. We're on the COT net traders positions just very quickly before we go. Draw levels of entry, stop and target. Now, in terms of, if you're unfamiliar with the COT, it's always the foreign currency first. So we're looking at CAD USD. We obviously trade USD CAD. We'll reverse the chart around in a moment. The purpose of this chart is just to see really what the smart money commercial hedgers are doing against the large speculators. And I've just highlighted three setups, including the most recent. What we like when we're looking at this report is the two groups to be diverged against each other and them to rapidly build up their positions. So they're buying and selling against each other, because that will normally point to a break in favor of the commercials. And you see it here on the left of the chart. Commercials come in long and just really step up their buying. Specs go against them right into this bottom, goes in favor of the commercials. Commercials are hedgers, they'll just naturally drop off a few hedges. Specs drop off some shorts as well. Come down. Then the commercials here, as we start to rally, they just sell out of all of their longs and go net short. So basically into this high, they're building up shorts. Specs cross long against them, go long into those highs, breaks in favor of the commercials. Okay, two groups lighten off their positions, but look here, commercials suddenly really start to sell hard, specs buying hard against them. You do get the rally, obviously, but the rally's starting to fail, not getting to these highs where the commercials sold hard previously against the spec. So it looks like it's going to break strongly in favor of the commercials. The biggest divergence between the two groups in over 2 years. Okay, this chart only goes back a year, but if you were to take this pair back 5 or 10 years, when you've got this sort of really aggressive buying and selling going on between the two groups, it will normally break heavily in favor of the commercials. So we think, yeah, obviously we've come down a little bit. We all come down a lot more. Okay, right, now what we need to do is obviously put the chart the right way around and go and look at USD CAD. Right, USD CAD daily chart, do some technical levels in a moment. Now, in terms of commercials, they're selling the CAD against the USD and against all other majors. At the moment, the speculators are buying hard. Why are the speculators so bullish, but the commercials are so bearish? Now, in terms of this, just drawn up some points here. The CAD bullish fundamentals are peaked. Yeah, and the speculators aren't seeing this. And you very often get when the fundamentals look at their best, they're going to obviously get worse. Okay, and speculators never see the turn coming. The commercials, they always do, basically. And here are the reasons why I think, the commercials are so bearish of the CAD. You can obviously just trust the commercials if you wish when they diverge against speculators, but we just like to work out what we think the commercials are thinking. Now, in terms of interest rates, they're now better in Canada than in the US. And speculators take that as really bullish. Well, is it? The answer is no, because there's a cut coming in Canadian interest rates probably into year end. Your market, has bought the Canadian dollar on the anticipation that the interest rate would go in favour of the Canadian dollar, and the Bank of Canada would not cut until mid next year. Okay, so you did get the cut from the Fed, you didn't get a cut from the Bank of Canada. They're very cautious in their statement. They point to a cut coming in to year end. Okay, now in terms of why the Bank of Canada will cut, the economy has peaked. If you read a lot of mainstream media and what specs are saying, that Canadian economy is doing really well. Well, it is doing pretty well, but it's not getting any better for it. We said this a few weeks ago. The warning sign was there with the slow up in business investment in Canada. When you get a slow up in business investment, that is going to be reflected in other economic data. Okay, and just give you an example. Recent data on Friday in relation to employment numbers was disappointing. Minus 1.5k jobs lost. Market looking for 15k jobs added. If you've got a slap in business investment, then hiring's going to go down, isn't it? That's what happens. Specs aren't seeing it. We also had a decline in export data and import data. Again, market not expecting it. The economy has peaked. Okay. Now, the CAD has benefited from optimism about trade talks between the US and China. If you read the media, you'd think there's going to be a really happy conclusion pretty soon. Well, if it is a happy conclusion, it's in the price. We don't think it's going to be a happy conclusion at all. Two sides are still a long way apart. That did create some risk on, where risk currencies should do well. Canadian dollar is a risk currency. You can see recently the USD pushing up. USD is going to push up a lot more in our view. Right, let's do the technicals. Nice sell-off there as speculators really short the USD on the anticipation of a US rate cut which comes, and then look what you see here, and this is what we noted in our previous video. Small red. Look at the low, then that low there in line, then that low in line there. So three lows in line, okay, and small candles. So what we were thinking here is the speculative selling is drying up. We should see a move to the upside. This blue candle is the one we're going to use to get in. Okay, why? Tail poke through those three lows there. Blue, we did it at 130.80, and then we come into the Fed and the Bank of Canada here. Fed cut as expected. It's in the price. Bank of Canada don't cut, but they're more cautious than the market expected, and the USD pushes up. Now, pushes up, comes back. You see a little bit of downside here. We're trying to get through this 20-day moving average, which we always like to give way if we're really bullish of a currency. And you kind of fight in the 20-day moving average here, get through it there, hold it there, little red. This is into the Canadian employment number, okay? Just below a round number. A round number is always important. Want to see the round number taken out? It does. And we're sitting above the round number. So my view now is the specs are going to get run on stop. The good news for the Canadian dollar has peaked, and we are going higher. Just draw a trajectory in there. My own view is if you're buying it, just buy it through the high. You'll be clear of those three candles there. See if she runs. Now, in terms of the size of the divergence between the two groups, where are we going? We should get up to here. So just above the 135 level. And I think we'll run on to 138, which is at the top of my computer screen. So for fresh trades coming in, it's a good one. Just get the strength through here. Stop should get run, then up. Where would you place your stop? Well, I think just there, because then you're behind the 20-day moving average, which provided a little bit of resistance. Now we've broken up, it should provide support. So it's a nice risk reward trade in our view. And obviously, if you get a nice big strong blue up, specs will be getting run, you can bring your stop up even tighter, probably behind this big blue candle here. Okay, so yeah, the COT, yeah, has been effective in this one so far in helping us get a really good entry, but we haven't really got much profit. It's only 140 pips, and I think, you know, this has been a problem recently in the markets. The volatility is not that high. Okay, one thing I would say in terms of shorting the Canadian dollar, I just don't see much downside, and I do think the volatility will pick up, and the CAD will get hurt in the week ahead. So it's been kind of slow progress so far. Hopefully speeds up in the new week. Now we're going to look at a couple of crosses. We did look at some other crosses in a video about a week ago. My views haven't changed on those crosses. I think these two look really good. We'll look at CAD CHF, then we're going to look at NZD CAD. So let's go over to the chart. Right, CAD CHF daily chart. Now, in terms of CFD net traders positions, the CFTC only release data for the majors. Okay, however, you can work out the cross simply from the majors by working out what the groups have got in the two pairs that make up the cross. So USD CAD, USD CHF, and we just do it as a simple ratio. Okay, now I've written out the ratios here. Commercials 4.7 to 1 in terms of shorts over longs, so very bearish. Speculators 4 to 1 in terms of longs over shorts, so bullish. Divergence between the two groups, if you add them up, 8.7. Now I've noted up here we had a divergence that reached +8. Look what happens, it goes down in favor of the commercials. Got the same again. It's come down a little bit in favor of the commercials, but it's seen a little bit of a rally back. In fact, the rally before the 76 also was a +8 and broke in favor of the commercials. So from our point of view, that 76 level is kind of the line in the sand. And yeah, we've sold off the level. And now we think it's going to hold on a close basis. Now, in terms of round numbers, you can always poke through a little bit. There's always a lot of order flow around. So you want any stop well back from the round number. Okay. Now, in terms of what happens, this big red looks pretty decisive to us. Slices out the 20-day moving average, base a bit. Now we're fighting to come through the 20. Now we could always get through the 20, but if we got up towards 76, just look for bearish confirmation off the level. Okay. What if we don't get up to 76? A little bit of a triangle there. I would just come through there. Okay, so sell back to there. Obviously bearish confirmation you need, or just sell through this double trend line support. And then I think we'll be off to the downside. Where are we going to go? It should target the round number at 73. And if you're looking at a weekly chart, possible overrun to 72 or 71. So it's a nice looking risk reward trade on a break lower here, stop back behind there. Get obviously a better risk reward if you come off the level. But yeah, for us, yeah, if it doesn't rally higher, it looks a good sell. Plenty of specs to get hit on stop, and that 76 level is a tough level to get through for specs. On the last 3 occasions, they failed against the commercials. I don't think they're going to succeed this time. Look, obviously they could, but I think the odds really do favour nice break to the downside in this pair. What I'm going to do now is look at NZD CAD. Right, NZD CAD. Now, in terms of COT net traders positions first, this is the biggest divergence in terms of CAD pairs between the commercials and specs. Commercial 6.1 to 1 in terms of longs over shorts, so pretty bullish. Speculated 6.6 to 1 in terms of shorts over longs, so very bearish. Divergence between the two groups, 12.7. Regular viewers will know we like divergences generally above 10. They'll really interest us and we'll want to go with the commercials. Now, in terms of the NZD, it does sell off hard, okay? But we fall down here. So when the commercials ramp up their buying of the NZD and specs ramp up their selling, come down to test this level, and we hold it, we push off, okay? Specs push her down again. She pushes up off the level. Specs push her down, they can't quite get to this level. We push up, specs push it down, but we're not really falling hard, okay? Now, my own view is this level here is going to be very hard to take out, okay? There's just too many speculators short. If we did come down towards this level, up by any strength, so if we tested level, just come back through 83, stop behind 82. So yeah, you could buy off the level, bullish confirmation. What if we don't go down to test the lows? Are we going to just break to the upside? We could. I think on an upside break, if we do that, 3 fairly small candles, just really this 84 level is significant. I think it won't come through the exact tail hard, give it a little bit more strength, actually let those 2 lines get taken out, 84.20 in, okay? If we get up through the level, I'll be looking for the specs to get run this time. I think the selling is exhausted and now the specs will bail out from the trade. You wanted to buy through 84.20. I think there would be a good stop level. So I can't get my line straight behind that level, because then you'll be behind the 20-day moving average if we punch through. Okay, we punch through. I'm not worried about these tails here. We should then run to the upside. How far could we run? My own view is I think we could get up towards the 86 levels. You've got probably about 2 to 1, but I think the probability is very high. Okay, I actually think we could run on a bit because the CAD is just so overbought. You have to play this one as it goes, obviously manage the trade. It could even get up to 87. Now I think if we get through that 84 level again, and we get a nice big blue, then the specs are going to get run and we should hopefully quickly get up to target. So I think this one looks a decent trade. In fact, yeah, when I look at CAD short trades generally, and I've covered obviously 4 other crosses in a previous video, yeah, the CAD looks just so vulnerable. Obviously, sometimes you've got a currency that is universally overbought or universally oversold. Obviously, CAD universally overbought. If you're not sure which is going to move the quickest, you can always do a few pairs and just treat it as one trade. You won't get the best, you won't get the worst. We do that pretty often. Sometimes if you do one pair, the pair you do is the one that doesn't move. I've got a feeling CAD's going down everywhere. We shall see. Anyway, that is the video for today. Thanks for watching me as usual. Take care. Have a good day.